With world economics going through another period of turmoil, with these tariffs that we're all dealing with, I'm sure you're feeling the financial pinch. The price of goods and services are going back up for everybody, and it seems we have to make our money stretch even further. So here are the top 5 wealth killers or cash grabbers that the tariffs are going to use to make you poorer. And stay to the end because number 5 affects us all in a big way. But first of all, let's talk about credit cards. High interest credit card debt is a wealth killer and a cash grabber like no other. For most people, it's public enemy number one, and it never goes away. It only gets bigger over time as we pay down less. And it's not just the credit cards, it's the personal loans, the car loans, the student debt. It can be any consumer debt or financing debt with high interest. And as of this year, in the US, the average credit card interest rate has risen to 21%. And that is just the average. There are some that are much higher. That means your revolving credit card debt is not only not being paid off, it's getting bigger every single month in two ways. As the interest is charged every month, the compound effect as your balance is paid forward gets bigger. And on top of that, the actual rate of interest is growing, increasing your interest charges month to month. It's like a high interest credit death spiral. This compounding effect is a deadly touch to your wealth or money in the bank. On top of this, we are using credit cards more and more, relying on it for everyday expenses and cost of living pressures. This whole system is designed to keep you poor, eating away any potential bonus or money you come into. For me, one of the worst side effects is the lost investment opportunities. Every dollar spent servicing your high interest debt is a dollar lost that you could be using on your investment. And if you're not putting that dollar in your investments, then you're losing out on the compound interest that could be working for you. High interest credit is a wealth thief on a completely different level. To put this in perspective, if you had a credit card debt of $10,000 with an interest rate of 21% and just paid off the minimum each month, it would take you over 20 years to clear that balance, and you would have paid back 3 to 4 times as much. When you think about it, it makes your eyes water. So what can we do? Well, the first thing is obvious. We need to pay off more than the minimum balance every month. Well, that's easier said than done. But we need to come up with the money, either an extra income or make some sacrifices and cut back. Even better, you can do what we did years ago and do a combination of the two. Now, in terms of paying back the high interest debt, there are several ways you can do that. My preferred way is the avalanche method, in which you target the highest interest rate first and pay that one off. I would also limit your use of the credit cards. Quite simply, if you can't afford the purchase, you shouldn't be using them. Now, no one's saying this is going to be easy, but I can promise you it will get easier over time as you adopt better financial habits. You could also look for 0% balance transfers that allows you to pay off the debt without incurring any more interest. Using these strategies in combination will help you pay down this credit card debt fast. Remember, every dollar you pay off is another dollar in your pocket that could be working for you. And having money work for you is something we should all be doing. This is investing. And if you're not investing, you're allowing the tariffs to take more money from you. Now, to clarify, I'm not talking about saving. Saving money at best is storing it. Even the best saving accounts have woefully low interest rates, hopefully just about covering inflation. No, investing is about turning all your dollars into little workers so they can work for you 24/7, even while you're sleeping. And by investing, you're taking advantage of that secret ingredient that saving simply doesn't have: compound interest. When you invest each month, it's added to the previous month and the accumulating interest. And that interest is multiplying interest every single month. Eventually, the interest portion is larger than the principal portion, and it just keeps going, building on top of itself. Quite simply, there's no other way of building wealth and getting financially free than investing long term. It's the power of compound interest that drives it and eventually allows you to give up your job and live on the proceeds. By not investing, you are condemning yourself to work in a life exchanging time for money instead of having money work for you. Trading time for an hourly rate is the worst return because you're actually trading your most valuable commodity: time. Time with family and friends. Time to satisfy our ambition and chase our dreams. Now, some people could be unsure how to invest. Others could be scared, worried that they could lose everything. Or they could be like me in my mid-40s, worried I left it too late, once I realized there was a better way of trading time for money. Whatever the reason, if you have concerns, just start small, just $50 a month, and that will be a step in the right direction. If you haven't started already, then start today. Now is the best time. Invest in the stock markets, invest in yourself, and invest in your family. Now, another reason why people may not invest is they may not have any money. They may even know it's the best thing to do, but their salary is taken out of their account as soon as it goes in. They are broke, perhaps because they're living above their means and trying to keep up with everybody else. They call this a comparison trap, and in 2025, it's at epidemic levels. They're trying to live the same lifestyle as people around them, or even on social media, and they're living above the means by doing it. The vacations, the fashions, the cars, the houses, the high-end consumer goods. Lifestyle comparison crashes your personal finances and stops any chance of building wealth. And social media makes it far too easy to make you feel like you're losing in the game of life and falling behind. Showing off material gains and expensive lifestyles are off the scale, and it seems like they're getting younger and younger. It makes you question, what are they doing to be so successful? And what is it I'm doing so wrong? The thing is, and you have to remember, it's almost all fake lifestyle. You just don't see the credit card debt, the pressure and the stress that they are put under by management and sponsors. You don't see the anxiety and the poor health that they could be suffering from. The last thing that wealthy people do is flex. Most of them don't even want you to know how much they earn. Lifestyle comparison is a real wealth stealer, and with these tariffs being rolled out, it's only going to get more expensive for goods and services. My opinion, do yourself a favour and turn off social media. The last thing you need to do is follow these so-called celebs. Not only are they going to deter you from achieving your financial goals, point blank, they're going to stop you. Instead, focus on your goals and your path to financial freedom. Leave these flashy people behind. Remember, their flexing and showing off is simply not a true trait of successful and wealthy people. Real wealth is quiet and unassuming. Build a rich life that feels good, not just looks good. But it's not just a comparison trap that people fall into. Lifestyle inflation is another trap we can find ourselves in. And the worst thing about that is we don't even realize we're in it until it's too late and we're trapped. Simply put, lifestyle inflation is the increase of spending in relation to your salary. Years ago, I had a salary of $80,000 and my wife similar. And we enjoyed a nice house, a couple of cars, and maybe 1 or 2 vacations a year. Now, as my business grew and my wife's career took off, our salaries doubled. All of a sudden, our house wasn't big enough. Our cars needed to be newer, and we needed more vacations. Our spending, our expenses, rose with our income. We did renovations, bought the latest high-tech stuff, went out for meals more often, and got a cleaner. We had doubled our salary, but we also doubled our lifestyle expenses. Each month we were getting more into debt, and we couldn't keep up. We worked longer hours, worked weekends, and tried to keep our heads above water. Our salaries were bigger than we ever had, but we were more broke than we'd ever had been. We were no longer happy. In fact, we were downright miserable, so drastic action was needed, and it was taken. For a period of time, we took no vacations, no more eating out, no more shopping, and we put a stop to all the expensive luxuries. We reduced our spending, increased our income, and paid off our debt. Now, it took time, but eventually we were able to put into an investment fund and start paying ourselves first. Now, the strategy of paying ourselves first was a turning point for us, and we began our financial literacy. We learned to keep our lifestyle flat, to invest instead of spending, and to avoid lifestyle inflation at all costs. The truth is, wealth is what you don't spend, and sometimes it's even what you keep. If you're not wise and on the ball, you could be paying more taxes than you're required to. In fact, taxes can be a major wealth killer and a tax grabber that affects every single one of us. Now, taxes are unavoidable. We all need to pay our fair share, even the rich people. But failing to plan properly can lead to be paying more than necessary. Every year, the IRS and tax officers around the world close loopholes and tax benefits to ensure we get back less and less. These audits and enforcement laws have increased in recent years as governments around the world try to claw back as much revenue as possible. In 2025, governments are broke. They're struggling with mountains of debt, and they're generally poorly run. And in the past few years, it has been one thing after another. The pandemic, high interest rates, and high inflation. And now, just for fun, we have a global trade war that has knocked off trillions of dollars from the stock market. So don't get caught unaware. Get your taxes in order and ensure you're up to speed with all the new laws and rules. So what can we do with taxes? Well, any investments, like property or paper assets, need to be protected. Consider any tax consequences before selling an asset, like capital gains. Maximize your tax-free savings account, like your Roth IRA, your ISA, or your TFSA, before putting your money anywhere else. Don't miss out on that tax-free growth that you and your family can enjoy for years to come. You could also employ strategies like income splitting or income generating loans that can replace your salary. Max out your tax-free accounts to help you shield your income and engage tax loss harvesting. This sells losing investments like property or paper to offset gains from other investments. Now, this all can sound a bit technical and maybe even a little bit boring, but these strategies can save you significant sums that can be otherwise deployed to build your wealth. For us, we engaged a well-educated accountant to help us guide us through, and we got educated ourselves. Remember, not all the jobs and strategies will be exciting and full of energy. Sometimes the quiet ones, like tax planning and income budgeting, will produce the biggest effects. And it's those positive effects that will help you build your wealth faster. In the end, it's all about building your long-term plan and using one of the best tools you have, money. So ensure you're doing some strategic planning. Maybe work with an experienced advisor to minimize your tax liability and optimize your tax deductions that you can qualify for. So there you have it, the 5 wealth killers that we're dealing with and we have to overcome. By recognizing and avoiding these pitfalls, we can protect our wealth while we continue to build it. And I recommend you identify your wealth killers and tackle them head on. If you take action to neutralize them, it means you can retire sooner, go on more vacations, and spend more time with family and friends. And even if you're not looking to retire, like me, being financially retired brings a whole host of benefits that we can all enjoy. And if you're still unsure on how to start, I've put a video right here just for you. I will take you over the 8 areas I was losing money like there was no tomorrow. Back then, I didn't know any better. Now, I do. And so can you. I'll see you there.